What's going on, everyone? It is another live backtesting, but today's a special one. It is also the US presidential elections, and votes are in, votes are being counted, and it's tense. I've just updated my screen. As you guys can see, Trump is, I'm trying to, that was bad. That was bad. But yeah, Trump's currently in the victory, in the lead. He's got 230 electoral votes versus Harris, who's on 210. And so I think the volume that we're seeing in the market today is a direct result of that. And so over and above what we're going to discuss today, which is institutional sponsorship, I will just go through my pairs, my 4 pairs, what I'm seeing, and how we could potentially play out for today. I won't be trading today. I think there's just so much volume that's coming in. I was stopped out of a position this morning, my 3rd position this week. Arguably wasn't the best decision to trade going into this election because there was so much uncertainty, such a highly contested election. But I think this is, in hindsight, going to be great data for my plan and next year, just to say, look, I've had experience of trading the market during these messy conditions, and whether I look back in hindsight and it was, technical or fundamental, it will at least urge me to tread carefully and cautiously. So I probably won't be in the market today. I think I'm seeing, there's a few things I'm seeing, and I'll want some confirmation before acting on that. And so we'll probably look to then become active in terms of executing positions from tomorrow onwards. Tomorrow and Thursday, we'll probably have active trading days. But yeah, getting into our topic for today, we'll spend a bit of time on this, and then we'll spend a bit of time on some analysis. Building on top of last week, and if you haven't watched the backtesting session from last week, which focused on institutional order flow, then this is going to feel a bit perhaps confusing for you because we're going to build on top of that. So I do urge you to go back and watch that video from last week, Thursday, I think it was, that focused on institutional order flow, because that was more of a high time frame perspective, looking at where your institutional entities look to fill their orders, as well as offload. And the weekly and monthly timeframes are excellent sort of gauges of that. And so we spent a lot of time on high timeframes, mainly the monthly and the weekly. And so today we'll be focusing more on now institutional sponsorship, which concretely defined is the willingness to protect an underlying price swing that has a high probability of unfolding. And it's the impact of large institutions coming in to fund the side of the marketplace that you anticipated running in. And so while institutional order flow looked at where these players were most likely to get into the market, institutional sponsorship now looks at what are the markers or characteristics that these areas are being sponsored and that these players are actually, in fact, getting into the market at these points. And I think this is going to be a powerful tool for me personally, who's been quite good at your high time frame analysis. I can paint a good picture, use mosaic theory to formulate bias, and generate really good analysis, and price more often than not plays out in that direction. But and I think it's maybe something that a lot of traders relate with is it's trickier to determine when that volume is going to come in from a particular area, and avoid the false moves that usually unfold at these areas. And so I think what institutional sponsorship does is it provides a great framework to understand when a move is ready to go, because then that leads to higher conviction and entry. And it's something I was confused about when I heard from ICT when he initially said it, but he said when you take a trade, you need to understand why the trade is going to work. And it's a bit of a catch-22 because at the end of the day, trading is a game of probabilities. There's nothing that's guaranteed. Your edge is an edge. It's probabilistic edge. But at the end of the day, there's a whole host of market participants who are influencing the behavior of price. And so no one trade is ever the same. Even if it looks the same technically on the chart, it's never going to be the same. And so I struggled to understand at first what he meant by you need to understand why your trade's going to play out, or at least why it should play out as per your edge. But I think it just goes back to a deeper understanding of what's actually happening in this area that you've identified. What are signs or characteristics that you are seeing, that you have seen over time, that indicate that larger orders are being filled here and that price is going to distribute in a particular direction. And it's not to say that when you see that it's going to happen every single time, but I can tell you it's definitely going to increase your strike rates and the probability of trades playing out. In weeks like this, where we've got the macro environment, or rather fundamental news dominating the volume that we're seeing. There's a lot of new participants, people who are just trying to take advantage of the increased volatility, and so it's the technical factors aren't going to play out the way they normally do. They may, and I'll show you how they may, but to a more extreme degree. And so, yeah, some notes quickly just on institutional sponsorship, which I think will give us a good idea of what we're looking for. And there'll be stuff over and above this, but what I've highlighted is the opening price at midnight in New York is deemed as the true open. This is 0700 GMT plus 2. That's South African time. So we're going to mark that out, and we're going to see how that plays out. So these true opens, he says, not only give us an indication of, or at least an immediate indication of what may unfold, but can be used for longer term projections. So I'm trying to understand what that means, but we'll get into the charts and see. So he says pairing the true open with an old high or low provides a very strong confluence. I'm going to put this under here because it speaks to the true open. And then to identify institutional sponsorship in a particular segment of price action, you need to see immediate dynamic response. And so if it's lethargic, not responding right away, then it probably doesn't have the sponsorship. I want to be a sponge in this moment, because there's a part of me that says, yeah, but Sam, there's trades that I've held for days and it eventually plays out. And so I don't want to bring that bias into this, because then it might lead me to miss certain lessons or characteristics that define this teaching. And so we'll be looking for areas where we do have an immediate response. Immediate response can mean 1-2 hours, and then we go. I'm not saying as soon as I place the trade, I need it to start, running in profit, but there are moves where I've seen that happens. And then if you're on the right side of the marketplace, then it's going to move. And so another key sort of thing that comes up is knowing which order block to use. And he says that starts with asking yourself where the market should go, and that starts by understanding what you should be focusing on right now. Those are month one concepts. Those are down candles before an up move, bullish order block, up candles before down move, bearish order blocks, liquidity voids, these are fair value gaps, and then old lows to be violated before a rally higher, time-based liquidity sweeps, and then use specific generic things like time So every order block referred to is linked to a London or New York session. So I was essentially focusing on order blocks or fair value gaps that are mitigated or formed really during that London or New York kill zone. And so how I'm basically going to do it is looking at this that we've marked up, which was from, and I'll perhaps start from here, the 9th of March. And I'll come down to the daily. And I want to look at, from a more granular level, what was going on a low time frame. Could we refine these weekly levels? Was it necessary to refine them? Was there maybe a secondary order block that formed that led to this move heading high? Why did it turn from this point? What were signs that it kept going? What were signs that we were about to reverse from here? What happened here that reversed? So I think I just want to mark out at key sort of areas that the market reacted from, just so that I'm aware of what to look for, or at least when to look for a reversal. And while some may argue, but aren't you supposed to be back testing? You need to see in real life how it would have played out. I think this is more still an observation kind of session. I'm trying to figure out why things were happening at a certain point. And I think this is going to give me points to keep an eye out for when I should be looking for certain things. And so in large, I can probably delete a lot of these areas. I think it's more the key indicator areas that I want to keep on. And again, I'm just going to backtest, and then once I've so now I know price is going to push up from here, I will backtest this move until it gets up here. Then I'll discuss it a bit, and then backtest that move until it gets down here, then discuss that. So each swing I will discuss, and then comment, obviously. So what I've tried to do is just go down to the 1 hour, but I can't go down that low because I wanted to track. ICT does mention that you want to see the order blocks and stuff that form on the 1 hour time frame. But fortunately, we were at a period where what was this? April. Okay, we're heading into daylight savings, so I may get it soon. But the market hours, market open hours, kind of shifted a bit, so it works now. But I'm just worried once we get into March and the time shift from 7 to 11. It's going to go from 8, I think. That's a 3. Might be 4, 12, 8. Yeah. So we may just miss it by an hour. But we'll see. Obviously, the closer we get to present time, the more data we'll be able to access on the lower time frames. But we'll just use the 4 hour for now. Yeah. So yeah, some interesting things that I've picked up, and I want to document and journal it now. It means we'll obviously get less time to go through the rest of the data, but yeah, I think it's just important to be conscious of the things you're observing while you're back testing, because yeah, I've tried to make note of it in hindsight, and it usually doesn't pan out. I usually forget. So the first thing I was almost trying to determine is why were certain areas playing out and others not. Even though we did ultimately gravitate towards this order block here, we had an order block here, we had a fair value gap here. Why did we just sort of bulldoze it through those two? And then obviously gravitate towards this. It might have something to do with, this question here, which order block to use. Start asking yourself where it should go by understanding, all of these liquidity voids, old lows, all of that. And look, the only thing I can think of is this was the lowest point. Obviously, this was almost like in the middle of range, so this was at more of a discount relative to this one here, from a high time frame perspective. And I'll take this out because it becomes a bit less relevant, because I think the lower time frames kind of paint a really interesting picture, in that we initially shifted structure here. We were coming up, and then I think we swept liquidity there, and then displaced to the downside, shifted that structure there, and now we are trading lower low, lower high, lower low, all of that, and then we eventually displaced higher into this order block. And it was from this displacement that I marked the first true open. And then what I noticed here, which is something I've started to notice in multiple areas, was at the true open, there's a high probability of a 4-hour time-based liquidity sweep, 4-hour or 1-hour time-based liquidity sweep. I think the probability of a reversal in this area improves or is increased if we are within an order block or fair value gap. So we see it here, 7 o'clock true open, we sweep these highs, we sell off. I'm going to talk about the continuations in a minute. But then again here, 7 o'clock, we come up, we sweep this liquidity. It's probably clear around 1 hour. We're within a fair value gap, we sell off. This one was a bit different because the 7 o'clock form, but there was no time-based liquidity sweep. But then we get into our order block. 7 o'clock, that candle sweeps our time-based liquidity. Then there's obviously another one here, but we don't go beyond the initial volume that swept that as a result of, the first true open. Then we displace higher. Even here, this is a minor reversal, but we sweep. This time we're not in any sort of key indicator area, and this is also a pullback of, the predominant bullish trend now. So higher risk entry, but the principle kind of remains. We sweep after the true open, time-based liquidity, and then, we sell off, I think, the next day. And that's another thing. It may not be immediate that we see the reversal come in, but it may be an indication that this reversal is pending and imminent. True open, we sweep time-based liquidity there into this order block. And something I've also noticed is on the true opens, we form an order block. And I mean, that's something, if we come back to our lessons here, focus on order blocks and fair value gaps that are mitigated. And remember, I said all formed during London on New York kill zone. And a lot of these order blocks are forming at that true open. Sweep. Again, the reversal didn't happen immediately, even before we got the full reversal. But I mean, you could have seen this time-based liquidity sweep, still bought. This is a solid trade. It's Tuesday morning, full TP, let's hit the next Wednesday morning or even later that afternoon, because arguably these are the same areas. You could have just been targeting the base of that order block, and then you have another true open here as a confluence sort of point to lock in that profit. You also have an old high here on the 1 hour that would have been clear as a take profit area. But then again, you get this true open, it sweeps liquidity, forms an order block, but it's we've just got too much going on here and it's in between the ranges, so a bit irrelevant. I may have marked it out at the time, but we sweep, we sell off, back down into this order block. And then it's the true open, the last candle before we then distribute to the upside. And then it's more continuation from here. And then, you know, the next time we get it is here, as well as then at this point here, where we sweep liquidity. So I just want to take note of that. And then I'll discuss the continuations briefly. Then I'll just go from a high time frame, what we're seeing for US elections today. So I'll just say briefly, I actually want this to be bullet points. I'm not trying to write sentences. It's just more of a brain dump. And I understand now where he says it doesn't only provide what did he say? Chopins do not only give us an immediate indication of what may unfold, but also be used for longer term price projections. I think that's what I'm seeing now, where it's not only because I think the rulers and I think Trader Day, when he came out with this quarterly theory video, discussed true opens in some detail. And if you want to check it out, check it out. I think it's a good video. But he says price almost becomes heavy or light, depending on your bias, from the true open point. Meaning, if your bias is short at the true open and price starts trading higher, price becomes heavy, and then you want to be selling above that true open. And the inverse is also true. So if your bias is long and true open, price comes lower, you want to be long below that true open. And while I think it's a fair statement to make, I think that what ITC is saying is also true in a sense where that is one use of it. It gives you an immediate indication of what may happen for the entry you're looking to take on that day. But in the same way that I'm noticing now that, it gives a long-term indication of what may happen in certain areas. It's not only about the execution that you want to take above or below this level, it could be a sign that the trend is continuing or the trend is reversing. For example, here, sweeping liquidity that aligns with the continuation. Whereas here, the trend has been bearish, but now we're in a daily order block. We may have been expecting this liquidity to be swept here, but now instead we come lower. That doesn't mean that on this day we say, okay, we didn't get a sweep to the upside for continuation, so I'm still just going to take shorts in alignment with that. If we get another pullback later in the day and we're trading above this true open, it means that maybe something's changing. What happened? We swept this liquidity to the downside here. Let's wait for a potential shift because we know we're trading in a daily area. And so just noting that and I think I just touched briefly on, what we were seeing in terms of the continuations too, in the sense is that I was marking out the liquidity voids, the fair value gaps, and then seeing, how are the true opens reacting to that. In this moment here, we got the true open. Arguably, this wick formed long before we were down here. So while we did have a retest earlier in Asian session, we still got an entry at that true open before price then swung to the downside. So that could have been an entry opportunity, coupled with the fact that we were displacing, we were forming those fair value gaps. We know we've just shifted structure here. It gives good conviction that price is going to continue lower. Right? Similar here, but here we have a time-based liquidity sweep, but still within a fair value gap. This placement higher, it didn't happen on the 7 o'clock candle, but the next one, and arguably there could have been multiple entries here. We could have been stopped out of this initial entry, depending on how well protected our stop is, before price then went. Wasn't much entry here, but there could have been something on the lower time frame. I stand to be corrected. But this has been solid game changer in terms of just viewing at least tentatively how these areas play out. And I will go on to backtest the other legs of this just to see how this plays out over time, just because I think there's a lot of value that's going to be unlocked from this. And so in this leg, can be used as profit-taking areas. If we just come down here, let's say at this true open, or even if we were long from here, this area stops up below here, we're still holding. Can set targets there. Clean. We've reached that. Push again. We see true open, price back down into this order block. We long from this point. Again, we've got the same true open that we can use. If you want to extend it a bit to equal highs, you can. Both would have been fine. Obviously, this just secures a bit more profit. But again, you out at that point before the next correction. Take this entry somewhere in this area. Look, this one may be, obviously these are invalid, but not invalid, but don't provide as much upside potential, can extend that. Nobody says you can't use all true opens. This comes and hits it to a T. Nobody says you can't extend these areas. You could have profit taking 1, profit taking 2 here. Or from this area here. This is a solid move from Thursday over to Friday, but a very clean 4-hour push. Take your short from that true open, somewhere in this region here. Conservatively, you know it's a pullback, but you reach it to a T. I think it's crazy how price gravitates towards these areas. Again, if you're taking an entry somewhere in this region here, you can either set it conservatively here, but you know the trend is bullish in this area or in this circumstance. It might have been up to that point there. So, yeah, I think some good lessons from this. And yeah, before we close, we'll maybe just want to do brief just view on what I'm seeing for, some pairs and how they're playing out ahead of. This was the one position that I was holding yesterday that's now stopped out. Again, this was a breakdown of this uploaded onto TradingView. So be sure to check that out if you want a detailed view of kind of what was going on here and what the bias was and why I took the entry and all of that. But we can see, just starting from the dollar, to journal that, just starting from the dollar, price pushing up very aggressively. On the weekly, I think we're heading into those areas now where we could start to see a bit of indecision, but won't be surprised if we come up to tap these highs or even, 400% sort of retrace. But still within this range before we potentially sell off. I think that's where a lot of the moves are going to come in. This seems more liquidity generation. I think especially given that we haven't seen the final outcome. Trump is leading 247 to 214 in terms of electoral votes and is winning in some major states. I think, what is that, Arizona, Nevada, some other big states, but seeing the dollar rally up from a technical perspective, seeing this as a sweep of this time-based liquidity here. But again, this is what I was saying, where your technical edge may not be playing out the way it does. You're still seeing the normal things, but in a different circumstance. We've got a fair value gap here on the daily. We've got an order block on the daily. Both of these are just being violated. So we're still seeing a time-based liquidity sweep, but it's just to a much more aggressive sort of degree. We're still within, this weekly range though, so it doesn't discount the fact that we're at a premium area. And so arguably the volume is justified. Euro USD, similar. A lot of liquidity generation here. Was in a short yesterday and was just stopped out with this move higher. Before prices now sold off very aggressively. But you can see this is largely corrective. It was a bullish trend, but very corrective as price was just moving higher. But yeah, we've come down now, arguably violating this. But what are we doing again? We're sweeping time-based liquidity to the downside. So don't be surprised if we potentially get, the inverse happen over the rest of the week where price starts to then trade higher. Technicals and the fundamentals more often than not tend to align in these times. Audio see a bit different, and I think arguably cleaner because we've got the weekly order block that we're in, and we're now tapping into that optimal trade entry area. This has fallen nicely from this order block. So from a technical perspective, this is actually looking very, very nice. Sold off nicely. Price, again, sweeping this liquidity. And again, I think like all pairs, I'll be waiting for confirmation that we're going to start trading to the upside. So I'm basically betting on a bearish dollar and for the dollar to sell off. And we could do it within this order block. We could come down, tap the 79% area, come even lower before we get higher, because there are those who are aggressively buying pairs like this now, knowing that we're in these sort of liquidity voids, and we swept liquidity in that sense. Pound JPY, similar. I was stopped out of shorts yet this morning, but I'm still a sell on this pair. We've just tapped into a deeper premium area, and I do still see us selling off here to the downside. From a daily perspective, look, the 4-hour trend has shifted lower, still kind of being established, but from a daily, again, in a higher time frame premium area, what we could see is a rally higher and a sweep of that area before we then come lower. So potential that definitely could happen. And I think dollar yen is almost just more of a direct reflection of what's going on the dollar index. And this literally came and swept this area to a T. Yeah, just a bit of a late entry. But it's good to see that some of these areas did actually hold. And some of these are going to be mistrades. And that's all right. Because it's data at the end of the day that contributes to increased awareness of things that go on. And we're just trying to bridge the gap between sometimes the things we see in hindsight and the way we behave in the moment. And so this is impulsed higher. This order block could or could not hold, but I do see a time-based liquidity sweep of this area before we sell off. So keep an eye out for that. But again, banking on a bearish dollar for this. So that's the forecast. That's what I'm seeing on the pairs heading into US election. I think we will get the announcement today. It's going to be an interesting one. So trade safe. This was an important session on institutional sponsorship, and I think there's a lot that you can take away from that, a lot that I've taken away from that. And just remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in